Last year in 2024, I made a video where I explained why I quit my 9-to-5 job. One of the effects of having no income is that in order to preserve cash, I had to stop contributing to my dividend stock portfolio. Despite no contributions hitting the account, the portfolio kept growing at a slower pace and I was still buying stocks with dividends I received. So having no income wasn't a full stop, just a slower pace. One of my goals for 2025 is to get a job so I can start contributing again with the intention of investing in my core holdings. I want to take the dividend stock portfolio to new heights. After applying to several job postings, I can finally say that I have a job, which means contributions are back to the portfolio. The amount I'm going to be depositing is $100 weekly. This is less than the $130 weekly I was investing when I had my other job. There's a reason for that. Despite the fact that the new job pays more than the previous one, this one is not a remote position, so I have to add gas for commuting into the budget. Also, I was jobless for several months, so I want to fill the emergency fund again. As time goes on and I grow within this company, I'll slowly increase my contributions. That's not the only thing that changed. I've been mentioning for a while that I want to reduce the defensiveness of the portfolio and aim for growth while building a solid core holding foundation. My dividend stock portfolio is overweight in consumer defensive. Being heavy on consumer defensive means more cash flow and stability, but limited growth. I'm decades away from retirement, so this is what I did. I sold my full position in Coca-Cola, Kimberly-Clark, and Clorox. Before going into the numbers, I want to mention that me selling these companies doesn't necessarily mean that they are bad holdings. They just don't align with my current goals. I'm looking for more capital appreciation, higher cash flow, faster growing businesses, and these companies don't align to that category. They are already extremely mature businesses and growth is limited. I sold 3.22 shares of Coca-Cola, which is 0.85% of the portfolio, and got $202 in buying power. For Kimberly-Clark, I sold 4.10 shares, which is 2.26% of the portfolio, and received $536 in buying power. And last, Clorox. I sold 5 shares accounting to 3.26% of the portfolio and got $755 in buying power. Combining everything, I got $1,493 in buying power to spend. Out of that amount, $92 came from capital gains. Also, this doesn't count the dividends received by all 3 companies throughout all the holding period. I used most of the cash to buy 1 share in Microsoft, 1 share in Google, 1.75 shares in ADP, and 1 share in Texas Instruments. All of these businesses are high quality companies that compound over a long period of time. They have growing fundamentals, strong competitive advantages, and the cherry on top, shareholder friendly. They return value to the shareholders in the terms of shares buyback, and they all pay a growing dividend except for Google, which they started paying a dividend last year. I am pleased with the changes I'm making here, and some of my viewers will agree, especially those that were mentioning that I was heavy on consumer defensive. I will not stop here. As the year goes by, I will be monitoring additional holdings and making the necessary adjustments to continue expanding this portfolio and follow my plan of high grading it. So that will be it for this video. If you made it to this part, hit like and subscribe. Thanks for watching, and I'll see you in the next one.